I'm here to talk to you about a little bit about mobile payments. Now, you've already heard a little bit about the future of mobile payments from the e-commerce side of things. And what's really starting to happen now, which is very, very interesting, is about 2 years ago, I'm sure most of you guys have heard of a little company called Square, started up by a man named Jack Dorsey. And when he started this company, I'm sure many of you have heard the story, but for those who haven't, he had a very good friend of his named Jim McKelvey, who's today one of the co-founders of Square, and he creates pieces of glass as art. And one day he lost a sale because he couldn't take a card payment from a customer who wanted to buy this piece of art from him for, I think it was $600 or $700, something that you don't really have that much cash on hand. And he complained to his friend Jack about this and said, Jack, this really shouldn't be that hard. I mean, I don't do that many transactions, a week, just once in a while. I'd really like to be able to take a card payment because I'm losing business here. And of course, Jack went off, and the rest is kind of history. He used the situation in the United States to his advantage, where it's one of the points that I want to talk about in discussing it and kind of talking a little bit about the development of mobile payments, how it's come about. So it took someone like Jack in the US to come up with the idea where previously PayPal has been out there with a PayPal app. How many of you out here, by the way, how many of you out here has ever paid with your mobile phone for something? See a show of hands in the air. Wow. Okay, so there's room for improvement here. That's good. That's really good, because we can do something about that. It just goes to show that mobile payments has been talked about for so long, but it hasn't really happened yet. It really hasn't. And it took something like Square, a success story that inspired everybody to realize that, wow, this is really happening. It's really happening right now. Now, I'm talking a little bit about the current state of the market, what it looks like in Western Europe. Obviously, the one thing that is really driving mobile payments is smartphone penetration. Without this device, mobile payments is just another dream that we can keep talking about until it actually happens. So penetration of smartphones in the various markets is something that's really driving the opportunity for companies to offer mobile payments and to give little business owners like Jim McKelvey, obviously he's a bigger business owner these days, the opportunity to take card payments. Now, this is a really, really big thing for little, small merchants, because if you're let's say you're going out to a farmer's market and you want to go shopping and you want to buy a prize pumpkin for your wife, and it turns out it's $50. You've got 45 in your pocket. It sounds very, very simple that, why should that really stop us? He's standing out in the middle of a field, he's got a mobile phone, he's got coverage, he should be able to take a card payment. But guess what? The current model for card payments is that you have to have a terminal. You have to have a terminal which is hooked up either wirelessly, most likely to a phone line, to be able to process the transaction. Now, these terminals don't come cheap. They cost about 200 to 250 euros. I just moved here from Switzerland. They cost even more there because they last longer. Swiss people, they build things to last. That's great. It's not so good if you're a small merchant and you want to be able to accept card payments, because it means that you have to shell out 300, 400 euros, and then you have to get a merchant agreement with a bank, and you have to sign up for about 2 years of paying a fixed fee of 25 to 35 euros before you've even made your first transaction. Now, this means that adding all of these costs up, the little guy, he doesn't have a chance. There is no way for him to take this card payment. Now, with smartphone penetration reaching the levels that it has, doing a little bit of research, looking around, Ukraine, for example, somewhere between 10 and 14%. The estimates for this are that by 2015, you're looking at 45 to 50% smartphone penetration in this market. Now, in a country like the Ukraine, where Everybody uses cash. A lot of people have debit cards. Debit cards are starting to come out into the market, but from what I hear, people use their debit cards twice a month. They use their debit cards twice a month because it's payday twice a month. So you go to the ATM and you take out cash and then you go shopping. The whole point of having a card is that you don't have to have cash. Now, I come from Sweden, which is a country where, for the last 20 years, we've been paying with a card. Now, I can honestly say that I never go out in Stockholm with cash in my wallet, ever. Usually because my wife has taken all of it, but that's a separate point. But it's at the point where I can pay at a hot dog stand, taxis, wherever, I can pay with a card. So cash is migrating out of society. It's redundant. It's not needed anymore. Now, if we look at the state of this current status of Central and Eastern Europe, you have the same kind of opportunity here. There's a lot of cash, they're cash economies, but you see a number of different projects which have been started to try to change this, leveraging the smartphone as a platform. Now, if we're able to take the smartphone platform and we can all of a sudden offer these merchants a very, very simple way of taking card payments. We offer them a percentage-based fee. Square has done that in the US. We are doing that here in Europe. It gives them the opportunity to take card payments on their own terms and paying exactly 2.75% or whatever it is that they're offering. So the merchant understands what he's actually paying. Now, the size of the market opportunity, for example, going back to the Ukraine again, is last year in 2011, I read some numbers, 290 million euros were processed some form of mobile device. Now, the projections for that into 2017 are 22 billion. That is an absolutely massive, massive opportunity for companies to be able to leverage the power of the mobile platform to be able to spread mobile payments to all kinds of merchants, retailers. Now, what's so interesting about this is that, okay, great, you can take a payment. That's the first step of this development. If you can take a payment, then at least you're not losing business as a small business owner. But what's this really all about? What is the one thing that everybody wants to get into right now? Mobile payments is the great buzzword. Everybody's talking about it. The telcos are talking about it. The banks are talking about it. Credit card companies are talking about it. They're thinking about it. And you've got companies that are small, disruptive. They get into the market. They come up with an idea of how to make everything simpler. Now, while the big guys, they're all thinking about, how are we going to get in there? How are we going to share the profits? How can we make more money out of this? In the United States, you have the Durbin Law, which puts a cap on debit card payments, how much they're allowed to charge. They immediately start thinking, where are we going to make up this lost revenue? We've got to charge it somewhere else. So everyone is looking at this. You've got a big sort of, I don't know what to call it, a syndicate, ISIS in the United States, where the telcos, credit card companies, everybody's getting in. Sitting down together and figuring out how are we going to make mobile payments happen in the future. Now, what's so interesting and why I love coming to startup events and talking to people who are involved in startups is that the big guys, yeah, they can move in, they can take over a market, but usually what happens is that small companies, they get in there first. They come up with some new way of solving a problem, because that's really what we're doing. We're solving the problem of being able to take a card payment, and they do it faster, and they grow in such a way that the big guys step back and say, whoa, how did they do that? Now, the thing that we're starting to see, and the comparison I can make between Central and Eastern Europe and Western Europe with regards to the challenges that we're facing. So in small companies wanting to offer mobile payments to small businesses, we like to call it the long tail of the market. So everyone who wants to take a card payment, but they can't. It's also too expensive for them to use a card terminal. We want to serve this market. We want to give them the opportunity to take a payment. So How do we do that? Well, we come up with a solution within all of the rules and regulations that we have to abide by in order to offer this. So, for example, in Western Europe, you have to have a payment institution license to be allowed to process money. I mean, this is money. We have to look after anti-money laundering regulations, the anti-terrorism and funding regulations. There's something called the European Payment Services Directive. This is something that every company that wants to offer a service like what we're doing in Europe has to comply with. There are high compliance costs. We have to verify the identity of everyone who's signing up as a merchant. We have to make sure that we know that they have a proof of address, or in the case that they're a registered business, we've got to collect all these documents. In the United States, there's been a phenomenal uptake because you can sign up online and you can verify the customer online and you can start transacting as soon as you receive your reader. In Europe, it's different. We have to collect the documentation either on site where the merchant has his place of business, or we have to ask them to send that in. Every single little extra step that you ask a merchant to do makes it that much harder for him to become a merchant and to start processing. So we have these regulatory challenges in Western Europe, and we have the same ones in Central and Eastern Europe as well. So I've learned a lot coming over here and talking to banks and talking to lawyers and understanding better what are the regulatory challenges over here. And it's very much the same thing. So one of the things that we as a startup are doing, we have to push the regulators. We have to push the card schemes because Visa and MasterCard, they're also sitting there. They've invested in Europe in chip and PIN technology in Western Europe. They're very, very scared that something like this is going to come in and all of a sudden all of their merchants who have invested in chip and PIN technology and who are members of Visa, MasterCard are going to say, hey, we spent all of this money now, and now these guys over here are giving away card readers for free. What's up with that? So we have to explain to them and to be not just innovative, but we have to push the boundaries of what's possible within the regulations that surround us. Now, startups by definition are fast. We move faster than the world around us. So we will bound to be pushing up against these regulatory challenges, but we have to push past them. We have to come up with solutions that work within those rules and frames, but to come up with alternative solutions so that a chip and PIN device, for example, as I was saying before, is very expensive. All these other costs make it impossible for us to have the business model that we want to promote, that we want to get out there. So we're looking at small magstripe readers, chip and signature readers. We're doing our own development to produce readers that come in at a price point so that we can actually give them away for free. Because we have to make it as easy as possible for the small business owner to come on board and to become a merchant. Only then will we really open up this huge opportunity, giving this underserved market the ability to take card payments. So what comes next? What comes after that, you think? Well, guess what? It's already happening over in the US. It's that other company that starts with an S. They're already doing it. In solving a problem for the merchant, you're helping to build an ecosystem from the ground up. Now, everyone here knows that when it comes to app development, getting two different sides of the table, whether it's content producers or content consumers, onto a platform at the same time, it's the classic chicken and the egg problem. It's tough. It's really, really hard to do that. What we've been able to figure out, and what Jack over in the US figured out, was if you solve a real problem and you invite the other side in without them having to do anything additional, without them having to learn a new behavior. So the United States has massive card penetration. It's got massive smartphone penetration, and it's got all these merchants who want to take card payments. It's a fantastic situation because in this sort of perfect environment, they can then bring these merchants on board and they can get this fabulous adoption that they've had. In Europe, it's a little bit harder, so we've got to work harder, but the opportunity is still there. It's a massive opportunity. There are 550 million people in Europe. All these guys out there who are running their little businesses, we want to be able to get out there and serve them as well. So where does that leave us in the long run? Well, step one is to be able to take the payment. But what's happening over in the US is the dream of making an actual payment simpler, faster. I mean, don't you just hate waiting in line for your coffee at Starbucks in the morning? It's really, really bad. At least in the US, they've got the Starbucks application. Well, guess what? Even the retail guys are starting to wake up to the fact that, hey, something's really happening here with mobile payments. Starbucks has over 4 million users of their Starbucks application in the US so that they can preload that application and they can use that to pay in the Starbucks. Now, why does Starbucks go and sign a deal with Square and invest 25 million of their money into Square when they already have a fantastic mobile payment app? Well, the reason for that is because the next stage of all of this is the frictionless payment. Now, I didn't coin the term, but it sounds pretty cool. A payment without friction. What does that mean? Well, it means that you can walk straight into your Starbucks, you pitch up at the till, and the person behind the till knows who you are. How do they know that? Well, because your face is on the till. You're there. I pitch up and I say, hey, I want my latte macchiato, put it on Petter. Tap my face on the screen. I feel a buzz in my pocket. That's the receipt hitting my phone. I grab my macchiato, and I'm out of there. There's no queue. There's no friction. There's no cash. There's no cards. There's just me and Starbucks and my latte macchiato. That's it. And that is where we're heading. I think this is the next step of mobile payment development. We're talking about, the previous speakers have talked about mcommerce, which is basically paying online for goods that are delivered to your door, but using your mobile device. Well, the really huge market to be unlocked is really the retail point of sale market. So what we've been describing here before. So if I can walk into Starbucks and I can pay just by being there, and the more merchants that pick up on this, where I'm able to just walk in there, they see me, they perhaps see the last 3 purchases I made there, they know, Petter's walking through the door. He likes latte macchiatos. Welcome, Petter, would you like your regular? That makes me feel like I've got a closer relationship to that merchant. Now that's a pretty magical thing. Imagine if you're a small business owner and you're a small coffee shop. You're competing against Starbucks down the street. You've got a bunch of regular customers, but the lines into your coffee shop are huge in the morning. It's really, really hard to reach out to these guys other than to put up a little sign, get a free muffin if you have your 10th cup of coffee. Now, if, for example, this merchant now, the customers are walking in, first of all, he doesn't have a very long line because think about ordering your latte before you get to the store. You pitch up, your face pops up on the screen, he taps on your face, you get your latte because it's already made, because he knows that you're 50 meters away when the order came in. You've eliminated the line. I, as a consumer, I get what I want, and guess what? Loyalty. The loyalty points, you've got offers, you give the power to the merchant to deepen the relationship with the merchant, to understand what the customer wants. The merchant can look at the purchasing history of his customers. He can tailor packages and offers to you so that the next time you walk in there, you're getting an even better experience. You're like, wow, this guy's fantastic. He knows that I like blueberry muffins. And guess what? I got 10% off when I bought one the last time. And so the relationship between the merchant and the customer and the holy grail of marketing, I think, which is contextual, location-aware marketing, coupons, offers, whatever you want to call it. When someone walks by your store, if they're within, let's say, a 500-meter radius, and their Facebook friends like coffee, they've liked coffee shops in your area, they've bought coffee with you in places, and all of this information is sitting right there. If you can leverage that, and you can pop up the offer that, hey, you're walking right by, and we can give you 25% off on coffee for you and your friends if you walk in the door within the next hour. That is real value And that is really something to be excited about. And I think that is the future for mobile payments in all of Europe. And the opportunities are as big over here, if not bigger, than they are over in the West. Thank you very much for your time.